Europe is about to launch something that could quietly change how money works for 450 million people. Most people think it's just cash on your phone, others think it's a surveillance tool, and some think it's the end of banking as we know it. All of them are wrong, because the digital euro isn't about payments, it's about who controls money in Europe. And once you see that, you'll understand why banks are nervous, why big tech is paying attention, and why the ECB is taking its sweet-ass time. Let's start with an uncomfortable truth. The money in your bank account is not your money, and it's also not money from the European Central Bank. It's not the same as cash. When you see €1,000 in your account, that's not money issued by the European Central Bank, it's a promise from your own private bank. Legally, your bank owes you that money. If the bank fails, you're protected, but only up to €100,000. Cash is different. Cash is directly issued by the European Central Bank. There's no intermediary and there's no counterparty risk. Now here's the problem. We're using less and less cash, but there's no digital equivalent of cash. Every digital payment today goes through banks, card networks, or big tech wallets, which means all digital money is private money. And that's the gap that the digital euro is meant to fill. Now there are three reasons why the ECB cares and why you should care. The first reason is that cash is disappearing rapidly from our society. But if cash disappears, that means that people like you and me lose access to risk-free public money. And if all our money supply depends on private banks, that's of course a bad thing. Secondly is the fact that big tech companies are controlling more and more of our payments. And if Google Pay, Apple Pay, PayPal become more dominant, then Europe loses control over payment standards and eventually its own monetary policy, because it will be influenced by these big tech giants. And third is that foreign money is already winning. Dollars-based stablecoins are already dominate crypto and on-chain payments, and if that scales, the euro becomes a secondary currency online. So the digital euro is Europe saying, we want public money to exist in the digital world, but on our own terms. So what is the digital euro actually? The digital euro is issued by the European Central Bank. It's denominated in euros. It's of course legal tender. And it's a direct claim on the central bank and not on your own private bank. It is not a cryptocurrency, it's not a blockchain experiment, and it's also not a replacement for bank accounts. Think of it as cash, but usable online. You would hold digital euros in a wallet. That wallet could be provided by your bank or a regulated payment provider. But the key difference is that the money would not sit on the balance sheet of the bank. And that shows that the money isn't controlled by them, and that they also can't lend it out. And that means that in the case of bankruptcy of the bank, the money would still be yours, no matter how much it actually was. Now, a big question that a lot of people have is whether the European Central Bank will see all your individual transactions. And the answer to that is no. However, it's also not completely anonymous. The European Central Bank has been very explicit. They do not want to see a lot of individual transactions, and they do not want to become a surveillance authority. Right now, the current design direction looks more like this. There would be low-value payments and high-value payments. A low-value payment would, for example, be buying coffee. For those, only cryptographic proof of the payment would be shared, but neither the merchant nor the European Central Bank would see personal details of yourself. There would also be high-value payments, for example, when you buy a car. For those, normal anti-money laundering practices would still apply. The funny thing about this question is that your bank already sees a lot more about your financial transactions than the ECB ever would. However, because we're so used to sharing our private data with companies, but not with government organizations, we seem to sometimes panic a little bit. Either way, the digital euro would allow citizens to have way more privacy when it comes to their digital financial transactions. So, on one hand, we have the citizens that would actually benefit greatly from this, and we also have the European Central Bank who is actively developing the plan. However, there's of course one party that doesn't like the idea of the digital euro, and those are banks. Banks hate the digital euro, and they've been lobbying hard against it. That's because they're afraid of one thing: disintermediation. Imagine millions of people moving €2,000 each out of their bank accounts and into digital euros. That will mean banks lose their deposits, and those deposits normally fund loans. And fewer deposits means less lending, which also means less profit for the bank. That's hundreds of billions no longer funding those loans. And that's why the digital euro will almost certainly have, for example, holding limits, it won't have interest in your wallet, and it will have no actual store of value role. It's designed for payments and not for saving. So as you can see, the ECB is walking a tight line. They would need to create something that's useful enough to matter for its citizens, but it's also not that attractive that it will break the entire banking system. The digital euro won't change your life overnight. In fact, you may not even use it at first. But strategically, it's one of the most important projects that Europe is working on right now. Because once money becomes fully digital, the question isn't how you pay, it's who you depend on to pay. And the digital euro is Europe's attempt at making sure that the answer to that question isn't Silicon Valley, Wall Street, or a private stablecoin issuer.